Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 140 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. How you doing, AJ? How was your fourth?
Oh, it was so nice. So nice. We went up to West Virginia and got ourselves some fireworks that wouldn't be found around here in the Washington, D.C. area and had a ball of it.
You know, I missed most of the firework part because my dog is not a fan and he's
Ah,
always barking, right? And they get a little over dramatized with that. So it was more of a daytime affair for me. But it looked like most people around the country were having a good time. We didn't have too
yep.
much drama, so that's good to see. Uh we're in Q3 now. We started quarter three this week. We
Yeah.
have a kind of a funny week in that we have our holiday yesterday. We're open today, right? We were open a little
Mm-hmm.
bit on Wednesday. We did get some pretty good employment or interesting numbers this morning. What are you seeing? Where do you want to begin today's show?
I mean, we can start with the employment numbers. The week was pretty boring, right? Wednesday we had a half day. Thursday was closed. We're back trading Friday, but we're not sure. The volumes look very low, so we're not sure how many people are actually coming back from 4th of July to participate. But I got the employment numbers up this morning, and they came in just as expected, right? We had a little bit higher uh payrolls number than what was expected, but if you look at last month, man, they really revised down that number from last month. Last month they reported 272. They came back this month and said, sorry, what we really meant to say was 218. So even though this number seems higher than what was expected, that revision down for May kind of offsets that. So, kind of steady with the jobs growth. At the same time, it looks like unemployment survey shows that unemployment's ticking up a notch. So things are moderating as the Fed had wanted. So it's giving people a little bit of solace, a little bit of belief that maybe the market is cooling enough for the Fed to do more than one rate drop, is what they're kind of advertising right now.
And so I guess the question the question is if employment tends to continue to slow down, then
Hmm.
that's good for the market because we will get lower rates. So it's
Hmm.
kind of like the battle of inflation numbers versus employment numbers. Which one's
Hmm.
going to be the greater mover to indicate what we're going to do with rates next?
I mean, all of a sudden this week, in addition, there has been more economists coming out of the woodwork talking about possible recession. They've been looking at the numbers, and I guess we'll get into more of a discussion about the first half of this year in review. But they've been looking at things and kind of ringing the alarm bells that, if the Fed isn't quick with their loosening of their monetary policy, we could quickly tumble into a recession.
And so you pulled up the S&P here now,
Hmm.
starting Q3 off at continued all-time highs. Is that correct?
Yeah, and so if we let me clean up this graph so that you guys can just look at a what I call a naked chart, something that doesn't have any indicators on it at all. And if I pull this up for today, we were in a stall for about 2 weeks right here. This area right here. Let me pull out my magic marker. Um, we were in a stall for 2 weeks, but then right before the market closed on the half day, we saw some gains, but I have to admit it wasn't on very high volume. And then today we're seeing some gains as well. And so maybe we've broken that stalemate that was there for 2 weeks. Maybe investors feel like they're a little bit stronger. In fact, if I pull up SIP, the FedWatch tool that we use to kind of see where the market has priced in, let's see if I've got that up, priced in any interest rate hikes. Here we go. We're on a different one of my screens. I'll pull it right over here. See if we can get that going here. There's my marker. There's my FedWatch tool. Just took a second to get things loaded here. I'm still on 4th of July holiday.
That's everybody. It's everybody tuning in.
Yeah, so not expecting any sort of rate hike in July, but now when you look at the September numbers for our first rate hike, that's jumped. If you look at even one trading day ago for a quarter point rate hike, we've already gone up about 2.5%. And if you look at last week there was a 58%. Now we're at 70, almost 71%. Even 1 month ago, we were talking about 57%, and now it's up at 71. These are the probabilities that rate hike's going to happen. So it's looking more and more like
hiker cut, right?
Cut by a quarter point. And then it looks like in November, it looks like, a slim margin of majorities saying that there'll be that it'll stay steady after that 1 quarter point rate hike in September. But there's a growing number of people who say maybe as early as November we'll get a second rate cut. Either way, by December, it's starting to look like that second rate cut is priced in. Maybe even a third rate cut. I think we can pretty much count on 2 unless something surprising happens. And anything surprising can happen. It's an election year, right?
Yeah, even as soon as this month, right? In July, if the Fed were to do something that would be surprising and probably would affect the market one way or another, whether they're trying to prevent a recession, right? Because I think a lot of the data is we're just like the recessionary effects are delayed, and so we have to act sooner than later before they take effect.
That's not the MO of our Fed. But yes, I mean, and what really worries people, and what actually, if the beginning signs of a recession kick in, right? What really worries people is when the Fed starts doing quarter point rate hikes one right after each other, and or if they do more than quarter point rate hikes, right? Because then that gives people the belief that the Fed is out of control, right? And so it would be smart, based on, what we're seeing here, if the Fed was to do one in September, hold in November, do one in December, they've got to be data driven, but they can actually, with their actions and with their words, we've been talking about it all along, but they can actually, is it the chicken or is it the egg? They can actually like spur on a recession. They can, a recession is where people stop spending money and start putting their money, into their mattresses. So if all of a sudden the Fed starts doing these unpredictable rate cuts, instead of ones that are more measured and, every couple of months, that could spur people to, it could actually exasperate the situation of a recession. So they need to be, they're walking a fine line.
Yeah, and quarter 2 started this week. It is a holiday week, so we probably won't be seeing much of the true sentiment until next week when,
I gotta say though, I gotta say, Sip, we're slowly seeing oil prices, and then we're especially seeing gold prices start to like head higher, and bond yields are heading higher. 10-year bond yields. This is all telling me that folks are moving their money into safer havens.
And it might not be a bad idea, seeing as how nicely we've run up in this first half of the year, even just percentage wise, which we'll cover in our second segment here on the topic of the day. Just seeing as it's a lighter
Mhm.
week, and we can kind of do a little bit of looking back. But before we do that, we do want to give everyone a chance to jump into AJ's daily workshop. Let's go ahead and throw the link to that in the chat. If you're new to the show, if you're new to the channel, feel free to hit that like, that follow, that subscribe button. We truly do appreciate it. Otherwise, if you're interested in learning a little bit more about what the team at Trading Trainer and what AJ's been doing here for 2 decades now in utilizing these wonderful options strategies and tools to earn income almost like a monthly dividend, like a monthly paycheck. There's some really good stuff in this webinar. We'll go ahead and throw the link to that in the chat. We're going to take a break. We are streaming live. It looks like we do have one ticker symbol that we can cover in our review. Otherwise, if anyone else has something that you want AJ to run through, feel free to throw it in the chat. If we have some time, we will take a look. Otherwise, we're going to take a short break. We'll be back to talk about the first half of the year. We'll get AJ's pick of the week, and we'll do our speed round. So sit tight, folks.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Lately when I've been waking up and turning on the news to see where the markets are, it's like the NASDAQ is up like every single day, like 100 points. And then I always come back to what we talked about in the previous episodes, where it's really only a handful of companies that are leading the charge. And so I almost feel like it's like a fraudulent all-time highs, because it's, the Apples and the Metas and the Microsofts and the Nvidias, but how is the rest of the economy doing? So where do you want to begin with the review? What are your thoughts? Do you agree with any of that sentiment there?
Oh, absolutely. So, a couple of data points here. First of all, we haven't had this kind of first half of a year. I mean, this is a fantastic year. And for it to be an election year, which is usually more of a calm type of gains in the markets. I mean, the last type I just read was, 1928, leading up to the Great Depression, was such a aggressive gain in an election year. But another data point, and this is something that you're pointing out, is, it's the Magnificent Seven, right? You guys maybe have heard of those stocks, right? We're talking about Google. Alphabet is the parent company of Google. Amazon, Apple, Meta, which is the parent company of Facebook. And then there's Microsoft, and there's Nvidia, and there's Tesla, right? Those are the Magnificent Seven. And those companies have been really leading the charge for the gains in the market. In fact, in the first half, 60% of the S&P 500 was attributed to 5 of those 7. That was Amazon, Apple, Meta, Microsoft, and Nvidia. Tesla and Google kind of have been doing their own thing, although Tesla in just the last 5 days has recouped a lot of its losses that it had in the first half of the year. But Tesla has been kind of the slow runner of those 7 this first half. And then in this last quarter, this last 3 months, it's really been 3 companies, Apple, Microsoft, and Nvidia, that have been 90% of the gains. And so there's this big divergence. We've never had this big of a divergence ever between like the best high flyers and the rest of the market. One of the things I like to do, and I've got my chart up, Sip, is take a look at the S&P 500. So everybody probably knows that the S&P 500 is cap weighted. That means that the bigger companies get more influence on what the S&P 500 is doing than the smaller companies that are in the S&P 500, right? Let me turn off my indicators here because I want to show you something. There's a symbol that you can plot called the S&P 500 equal weighting. This is if every single of the 500 stocks that are basketed in the S&P 500 were given an equal weight. And so that ticker symbol is SPXEW. SPXEW. And so now this is equal weighting. This doesn't really tell us much. I'm going to pull us back to a whole year, and I'm going to make it a line on close so that you can kind of see what I'm going for here. All right, so you kind of see what's happening. And if you give each one of the stocks an equal weighting, you can see that for the last 4 months, I mean, we've been kind of in a stall. But here, let me overlay the regular S&P 500 on top of this, and you'll start to see that divergence between regular companies and those high flyers. So let me go ahead and say add study, compare with, and the S&P 500. So now this purple line is the S&P 500. So while, you know, all the companies have kind of been in a stall, which is, by the way, really good for us premium sellers out there, the S&P 500 has been on this gain, right? In fact, in the last 2 months, most of the market has kind of been on this slight downtrend, slight, ever so slight, whereas the S&P 500, led by those, you know, high flyers like Nvidia, Microsoft, and Apple, have been hitting all-time highs. So this is alarming a lot of forecasters, right? Because we've never had this big a divergence with the high flyers and the rest of the market. The rest of the market seems to be, you know, flat, if not slightly down. And then you've got these 3 to 5 big stocks that have been, you know, running us up. That's causing alarm bells because it's just showing yet again another weakness in the markets.
And so, as a premium seller, right, this could indicate a possible top, maybe.
Mhm.
And
Mhm.
so, the way to take advantage of that is through the use of options and some premium selling, which is why you mentioned it's a good time to have that strategy in place, correct?
Absolutely. Absolutely. Premium selling allows you to profit from sideways choppy markets, and that's what we've got.
I feel like the media should report that other number more than they do the top line number, because it's like, you know, it's like how much higher can the market keep going? Like I've seen markets top, and it just feels like it every day. Like what's going to be the news event or something that triggers us to and then everyone's going to start panicking and being like, oh, the market's crashing. But is it really, or are we just kind of exhausted there?
Well, you know, there's a bunch of investors out there that are neophytes, like they're chasing headlines, they're chasing the hot news. Um, and so they're not really doing as much of their homework as, say, like a mutual fund analyst would do. And at the same time, you know, they also are quite fickle. You know, we have these trading platforms now that allow you to buy and sell, you know, with very little commission at a moment's notice. And so what's interesting is I've been watching crypto, right? Just a few years ago, crypto was like the hot topic, and all these neophyte fiscal, you know, you saw like celebrities buying bazillion dollars in crypto and talking about it, but they didn't really know what crypto was. In fact, I don't know if many people know what crypto is. I don't know what it is. I definitely don't know what NFTs are. With that said, now all of a sudden I've been watching Bitcoin drop. We just about a month ago, we were talking about $70,000 per Bitcoin. It's down at 55. You're seeing a lot of this fickle money moving from what was yesterday's hot topic to today's hot topic, like the Nvidias, the Apples, the Microsoft, anything that's an AI play. And it's bolstering the market up, but it's bolstering the market up with this kind of fickle money, right? This money that doesn't have a lot of insights or research to it. It's just, keeping up with the guy down at the street who just made a whole bunch of money on Nvidia. And so that's worrisome. That's worrisome for the rest of us investors, because that fickle money could quickly just be pulled out of the market and put into somebody's mattress, right? As fast as it was put into crypto and then now put into the AI stocks. We saw Nvidia really take a kick, although it's recovered a little bit, but Nvidia, it was almost down 15% in the last couple of weeks. So, you worry about that kind of money going into the markets, and you worry about seeing the underpinnings of some of the market money. This is probably the more knowledgeable, researched money moving into defensive plays like gold and even into oil.
Yeah, we'll definitely keep an eye on it now that it's the midpoint in the year. We may potentially start to see those greater shifts into asset classes.
Mm-hmm.
And we'll continue to report on it as we see it.
Yeah.
Otherwise, AJ, I think now is a good time to get into some examples into how
Sure.
can we take these amazing options, tools, and strategies and put them into effect into real names that you and the team and our viewers are looking at. So we'll cover a few of those in the speed round. But this week, and you did just mention gold. This week, you have a pretty interesting potential play in your pick of the week, Eldorado Gold, ticker symbol EGO. I believe this is a name we've covered a few times on the show.
Yeah, and you know what? I'm going to cover it again because this is a good way for us to play kind of the gold scenario. So let me pull that up, EGO. Now, EGO was at the bottom of its channel, testing its level of support a second time. I love it when symbols test support more than once. That gives me more confidence in that. And, EGO gave us a signal on Wednesday that it was a buy signal. This was after the market closed. So today we actually are getting follow through on buying some EGO. EGO, by the way, is affordable. So the scoop is I'm actually looking to purchase some of this Eldorado Gold, kind of playing in on that hedging. And I'd like to hold it for a longer amount of time, because it might be my hedge, right? So I'm either going to be buying some EGO stock either today or on Monday, or I was looking at the EGO January 2025 LEAP. The specific qualifications of that were the $10 call. So EGO January 17th, 2025, $10 call. So I'm looking to do either one of those purchases, either the stock or the call. If I have if I have any sort of protective calls because I was shorting EGO about 3 or 4 weeks ago, then I'd want to go ahead and actually, I'm thinking more of puts. If I have any protective puts in place because I've already been trading EGO, I want to be selling puts. Or if I shorted it, I want to go ahead and be now writing puts. So when we're at the bottom of a channel like this, you either want to be buying calls or you want to be selling puts. And so either one of those is what we're going to be doing today.
And for anyone that's interested in the arrows that you see on AJ's chart, this is AJ's free indicator. I'm not sure if we have a specific name for this one, but it is one that we showcase in examples pretty much every week. And so if you want access to that, the link to grab those indicators is in the chat. Head on over there, sign up, and you'll be able to throw it on your chart and get some of these signals. And I'm hearing a lot about gold just in the news as well. So it may be a good time to get into one of these alternative plays, because like you mentioned, this is a very cheap name to have a gold stake in, and it tends to be on the boring side, at least not recently in the run up, but I think that's a little bit more due to all these, external factors at the moment, more so than the company Eldorado Gold, their own specific situation.
That's why I want to be going long. And because I could either sell premium against this if it tops out, or I could just be holding on to it and get the appreciation on Eldorado Gold itself. And I just want to put a caveat out there, when people are part of my program, what we try to do is we try to supercharge these premium sells. And so what we do is we try to leg into our positions and we try to get the extremes, right? We try to leg in on the low side. That's when we're buying calls or buying stock. And on the high side, that's when we're, selling our calls and buying puts. And, when we plan out our symbols as part of my program, we really try to get those maximums. But truth be told, on Monday, this past Monday, SIP, I was with I was giving a workshop on iron condors and condors, which is another way of selling premium. And we were looking at just doing the condor natively, right? Meaning you do 4 option trades all at once and you set up the strategy all at once. And we were calculating the inherent reward and risk in doing all 4 of those. And, in the best circumstance, we got a risk on reward of something like 2-to-1, meaning there were based on where we had our range bound situation, we had a 2-to-1 risk to reward. We were risking as much as 2% of our portfolio for a potential 1% gain. But by putting all 4 of those stocks, those options on at once, that's a very easy trade. You put the options on and then you just wait. Whereas what we do in our premium selling program is a little bit more elegant. We go ahead and put each one of those trades on at a different time, and we try to time it so that we reverse those numbers and actually create a risk on reward that's less than 1, meaning you're going to be risking less than what you're going to get rewarded on when this trade comes out. In fact, we always target to have no risk with legging in, but it takes a little bit more effort. It takes a little bit more planning. Coming back to EGO, we can do a hybrid. The way that you increase reward and lower risk is simply by creating a short delta in between. And when I say delta, I don't mean the option Greek symbol. I just mean if there's a little bit of space and time between where you actually do the first transaction and the second transaction, you've already increased your reward potential and reduced your risk. So that's all we're doing here. We're not necessarily trying to top out or bottom out the trade, if that makes sense.
Yeah, and the details on the specifics of that you can find in the daily workshop if you want to learn a little bit more on the intricacies of how to get in and out of these kind of flowing positions, more so than how you describe the 4 at once, which to me as an options trader has always been a little bit more complicated than kind of the way that you're teaching, where it's kind of like every 30 days you can kind of do something, whether you're holding it for
Mhm.
longer or you're kind of doing a short-term play. So AJ's pick of the week, Eldorado Gold, ticker symbol EGO. I do have a question if you want to run through. Maria here is wanting to know your take on BND. Now, this is the Vanguard Total Bond Market Index Fund ETF, which sounds a little bit more exotic than what we cover. Your initial thoughts on that?
So this is showing a little bit of a stall. What we got to watch out for with the bond market is that the bond market is open pretty much 24/7, whereas the ETF here is traded only during market hours. So you might be able to see on my chart that there's some pretty extreme gapping going on. And so as option traders, we worry about that gapping a little bit because, we might have a range bound strategy in place, say, for instance, between $75 and $70. And then all of a sudden, overnight, we went to bed thinking, hey, everything's all good. And then there's a gap down of $2 or $3 and you're outside of your range. And the next morning you wake up in panic. So that's just one of my knee-jerk reactions. But with this particular ETF, I mean, it's based on the bond market, and its bond market is pretty, controlled, especially with the Fed doing this quantitative tightening that it's been doing and it will be doing for the next couple of years. So if you wanted to set up some sort of range bound strategy on ticker BND, I don't think it would be a bad idea. Again, whether or not you put the whole strategy, whether it be covered calls or whether it be vertical spreads or condors or double butterflies, whether you do that strategy all at once or you leg into the strategy and do, plan out an ongoing set of adjustments over time so that you really emphasize on the gains, on the income, like the payback every month, every time there's an expiration. Whether you do it one way or the other, I think you can pull out a very nice trade on this. My MACD indicator, even with the fast settings, looks to be a little bit slow to be giving you signals, especially with the gapping. So I might use something like the trends, right? So I would look at an RSI, I would look at the three aspects of the MACD, and I would look at price. Right. And if all four of those trends are going up, that's, a buy calls signal. If all four of those trends are going down, that's a buy puts and sell calls signals. And if one of those trends or more starts to buck the direction, that's when you stop doing those buying and selling, right? So I think you can simply use trends in order to navigate your signals on this.
All right. Hopefully that was helpful, Maria. We'll keep an eye on this Vanguard Trust ETF. Definitely more on the unique side. All right. We've got some pretty interesting speed round names, AJ. I think the first one is one we discussed last week and one that continues to be a pretty hot topic on the street. And this is Doug from San Diego, California, interested in where we sit with Rivian, ticker symbol RIVN.
Well, the EV market, and again, we talked early on about Tesla and how they haven't done well in this 2024. And that's probably more a sign of the overall EV market. I just picked up F-150 Lightning, and I got major incentives because, the EVs aren't moving. It's almost like there was a book out called Crossing the Chasm, and it was about how, the way that you get a new product to innovators and early adopters is much different than how you try to get your product to the majority of people, right? And so I think that all the innovators and early adopters who wanted EVs probably have them now, and cars last a long time now. And so Now we've got to figure out how to get EVs interested by the majority of people out there. And that's been a hard sell. And so there's been a brick wall we've been hitting into. I mean, look at a company called Fisker that we talked about. Every day I get notified about how, Fisker is in Chapter 7 bankruptcy. Their cars didn't live up to the hype, this and that. You can now pick up their cars for like $15,000 instead of $70,000, but you'll never have any service or repair parts on them. So you may be buying a $15,000 paperweight. Rivian is in this market as well, right? And there's just a lot of headwinds in EV market overall. But Rivian's been making and proving us wrong over and over. They've been making headwinds. They've got kind of a niche product with their pickup trucks and their SUVs. And it looks like they just got a big investment from Volkswagen. We talked about that last week. We've heard rumblings that they're in discussions with Apple. Remember, Apple went ahead and scrapped plans, at least for now, on their Apple car. But then we saw them, we're hearing rumors that they're thinking of investing in Rivian. So Rivian's doing some behind the scenes smart things, but it's still very news driven, very speculative at this point. But so was NVIDIA 8 years ago. And so, if you want to get some Rivian, now might be a good time since it's trading at $14.50, a share. I would make sure I purchase this thing in lots of 100 so that you could do some option trades around it. If you wanted to, you could purchase it using options. You could use my, selling cash secured put strategy. If we just take a quick look at that, July 19th would be the next expiration date. And so you just go down the strike prices here and you say, this is how much I'm willing to pay for a share of Rivian. So say you're willing to pay $13. Currently it's trading at $14.50, but you're saying, I'd like to go ahead and secure some of this Rivian stock for $13. I've got $13 per share and I've got it in lots of 100. So I have, $1,300 and I'll buy 100 shares of Rivian. I'm ready to do that. So instead of putting in an order for 100 shares of Rivian at $13, instead what you do is you sell these cash secured puts. And that basically is the same thing as saying, I'm willing to buy Rivian at $13 a share. And in return for doing that, you're going to get, it looks like 20 cents per share. So you'll immediately get 20 cents for putting that order out there, 20 cents per share, right? So that's what, $20. That's $20 that you can apply to the 1,300, right? If the transaction goes through at 1,300, you're already 20 cents per share lower or $20 lower. So it's creating an automatic discount. And if the trade doesn't go through by July 19th, you still get to keep the 20 cents and you can do it again and pick your next price for August. Every month you can do this. You're either going to get paid and get to keep that money, or you're going to get to apply that money that you made towards purchasing the stock at an already discounted price. So that's another strategy that you might consider on Rivian if you'd like to have some of this Rivian stock in your portfolio. And it might be a good time to do that.
Yeah, this definitely is a good setup for one of those longer, I want a name that I can hold for the next 5 years that I think will go up over time. But in the meantime, as it kind of sits side to side, use these options, collect some premium. And, I personally see these Rivians out on the streets all the time, and they're impressive. They look cool.
They're smooth.
And I just pulled up the picture of the F-150 Lightning. They have like the similar front lights. I don't know if you noticed that. They like the kind of curvature, kind of space looking. But the F-150 Lightning looks impressive. But it looks more like a normal truck though. So like it's like you don't know that it's electric.
It was funny. Yesterday, I was picking up some last minute supplies. We hosted a 4th of July picnic, and I was putting them into the frunk. And so that's the front trunk. The whole thing opens up, and a guy was driving by and he stopped and he's like, "Where's the engine?" Because the whole front of the truck opens up, and it's a nice area, and there's a lot of space. I mean, my little toddler who just had her uh, m- um, doctor's appointment, her physical, and she came in at a yard. She's 36 inches high. She got in and laid down, so it's a pretty big frunk. And so I was putting my groceries, I was putting my burgers and my brats in there, and the guy drove by and had to screech on his brakes. He's like, "That truck's got no engine." And I said, "No, no, it's all electric." He's like, "Oh, wow." But it looks like a truck, but it's definitely an EV.
I could see that happening. I get thrown off a little bit sometimes when I see the front end, like, because there's different models where it's just like open and then they're putting stuff in.
Yeah.
What color did you get? Did you
White.
white? Okay,
White with a two-tone interior.
there you go.
And
Well,
they're fast, man. I'm afraid, I think, when I was buying it, the guy said, at the dealership here, we have this maintenance package, but I don't actually recommend you buy it. And I'm like, "What?" He's like, "There's no maintenance, but there is, they have so much power that they tend to burn up tires, and the tires are very expensive. So maybe you want to think about banking some dollars every month for a new pair of tires." And it is fast, especially when you put the toddler in the child seat in the back, and she likes it when you go fast. So I like to make her go, "Wow, daddy."
I've been in the Teslas when they go into super mode or whatever they call it, and I'm scared. I am
Yeah.
not a fast driver. I like it nice and easy. Take our time. All right. Well, we'll keep an eye on Rivian and just
Yeah.
the stock and the companies, because it is interesting. They are competing for the space with Tesla, and Tesla's been like, a revolutionary company over the past 10 years. So maybe Rivian could be one of those names. So thank you for that, Doug. Let's move into our second name. I'm not sure if this is the EV company, but this is Brandon in Atlanta, Georgia, interested in NIO, ticker symbol NIO.
Yeah, this is the all Chinese company who's out trying to make a bargain. And I think they're facing the same headwinds that all the companies are. Anybody who's wanted an EV has one. And there's got to be some sort of strategy to cross that chasm to get your product into the hands of the mainstream. So at one point, I mean, I've been following Neo on and off for years now. They're not a new company. Let's look at a 2-year chart. Yeah, there were points where Neo was trading up at $24. Let me go back even further. Let's go ahead and go to time frame, and let's go back about 5 years. There we go. They were trading up as high as $65 a share, and now they're considered penny stock, right? They're down at $4.51. I know a lot of investors who got into Neo, and they are, white knuckling it right now. Would I purchase shares of Neo? I mean, technically now is the time, if you do want to purchase shares of Neo, that you would do it. We're getting these great signals. We're getting bottoms being found. But listen, the company doesn't seem to be able to turn a profit, right? You're looking at earnings, and just in the last 2 quarters, they're down 39 cents a share, 33 cents a share. They're only at $4.50. So if you're losing 33 cents a share, you're losing a lot of money. The nice thing about Neo is that I believe that they're somewhat being subsidized by the Chinese government. So as far as will the company disappear, probably not, because the Chinese government tends to have a little bit longer term outlook than most of us nations that are completely capitalistic, quarterly reports driven. So there might be some behind the scenes booing of Neo to keep it afloat, but it sure is at its lowest. So I'm going to leave it up to you. If you want to purchase some of Neo, you could definitely sell some premium against it if you wanted to, or like we talked about with Rivian, you can use the premium selling strategy even to acquire the stock, right? You sell cash secured puts to acquire it, you acquire it at a discount, and it's further discounted by the premiums you make. And then you can sell covered calls and again do that. So you could take that strategy, or if you really think that Neo should be in your portfolio, you can acquire this with some cash secured puts and then, hold it as if it's the next best thing. Some of their cars look really cute, and they are small cars. They would do well in Europe. It seems like they're doing well in China and other Southeast Asian countries. But yeah, they're hitting the same headwinds.
Yeah, I was gonna say alternatively, I don't see any Neos anywhere ever, at least
I
in
don't think you'd see them here in the States.
yeah, and so, personally, there's something about the psychology of, hey, if I'm gonna own this company stock and I'm seeing this car all over the place, it's supposed to be like a good thing. Their product is flying off the shelves. But it is at a really interesting price point there. It reminds me of when we were looking at Fisker, and Fisker continued to drop down, went bankrupt, is now dealing with that. And so, yeah, I don't know. I would lean more towards Rivian,
Rivian.
but
Coming from a business, we talked about this a little bit last week, but I want to remind our viewers, Rivian is making some very smart business decisions, right? Because obviously competing on whole automobiles against very established companies like GM and Ford and, Chrysler, that's difficult. It's a very saturated market, and you've got big players that are already in there. And on the EV side, Tesla's there, and Tesla's going to be there. They've gone through and with their superchargers and with their network, they've established themselves as the EV company. But Rivian's making these decisions of possibly, putting their technology in some of the bigger names, whether it be an Apple or a Volkswagen, powered by Rivian is what we talked about last week. Neo is out there trying to compete still, like Fisker was, only on finished cars. And I think that's difficult. I think that a lot of these car companies have not only a stronghold on the market, but they also have, ways of squeezing out new players. And so I think if you're going to be a new technology company, you stick with new technology. I'm not sure, you never know what's going on with Tesla, but they had an opportunity to also be powered by Tesla in a lot of other companies. And I think they've pulled back. Elon is going all in on the full self-driving is what I heard last. So new technology, which, he says is his cup of tea. But yeah, we'll see how that plays out. But when you compare what Rivian is doing business-wise to what Neo is doing business-wise, Rivian's opening a lot more doors by not staying so focused on being just a car company.
That you mentioned the autonomous driving, and I saw a very funny video yesterday where one of those autonomous cars got pulled over by a police officer, and so you see the perspective from their camera, and it's like he goes up to the car, there's nobody in the car calls support, and the support person's like, yeah, what's going on? And the officer's like, yeah, your car was driving on the wrong side of the road, so we pulled you over. And it was the first time that I saw this, we're policing the automation, and it's a customer service person calling in. I was like, okay, so there is some liability in those products, and I don't know, do they get a ticket, right? It's very interesting to see this evolving. I'm yet to be in any one of those cars. I don't know if you have. I've seen a lot of videos. They seem like they know what they're doing, but we're kind of in that learning phase still.
I mean, my truck, I now have 550 miles on the truck. I've had it for a couple weeks now, maybe 3 weeks. And I think I've driven myself about 50 of those miles. I have the Blue Cruise option, which is the Ford version of self-driving, but it's not. I have been in the Tesla where you put in the destination and it does lane changes and all that stuff. But the Ford Blue Cruise is pretty nice, especially with the traffic around Washington, D.C. You just set it and you go hands-free and it navigates the traffic perfectly. Like you just listen to podcasts. But it does have this weird thing where with infrared light, it shines up your retina, and then another thing watches. And if I like look down at like my phone or the display on the vehicle for too long, it tells me, it pays attention to where I'm looking, and it makes sure that I'm still looking at the road even if I'm not driving the car.
So it's like a little check-in, like you can look off screen, but we're gonna need you to check back in with the road every once in a while.
Yep.
That's a good
Yep.
feature.
Yeah.
Right.
I if anybody from Ford checks out our podcast, I would love to be part of your beta test for any of your new software that's more autonomous. That I would love to sign up for that program. In fact, I'll ask, but it's interesting. The dealer I bought the car from, I knew more about the car than they did, right? They're so used to selling gas-powered cars. I was like, "Well, what about this feature and this feature? What about, and I pressed this button on the truck that I had seen on a YouTube video that the guy that the truck parallel parks itself. And so I pressed the button and the guy said, "Whoa, whoa, whoa, whoa." I said, "No, no, no. The car parallel parks itself. It's good. It's good." I scared the salesman.
Well, if Ford wants to compete in the space, they need to get their reps a little bit more acclimated with the products so they could sell more.
Right.
But all that sounds great. I mean, I'm yet to see one of these Fords yet, so I'll keep an eye on it. But
Yeah.
all right, so that's 2 EV names in a row. Let's go ahead and jump into our third and final name in the speed round. This is Junie from Singapore, interested in St. Joe, ticker symbol JOE. Is this a healthcare play?
Yeah. And you want to know something? I have sold premium against St. Joe. Oh gosh, I started selling premium against St. Joe back in 2007. So I've been selling premium on St. Joe for over 15 years. It's one of those boring stocks. You can see here every earnings they make money. They're trading at about 50 to $60 a share. They make 25 cents a share every quarter almost religiously. They give 12 cents per share back to their stockholders. This is like the ideal company to sell premium against. And Junie, I see what you're seeing. I'm using my free indicator. This is called the confirming MACD indicator. And just as a reminder for you guys out there that use my indicator, what we like to do for a lot of our signals is we like to set it so that the price is actually being calculated on the volume weighted average price versus the traditional MACD that's being set on close. And then the fast length is a 6 exponential. The slow length is a 19 exponential. And the MACD average length is a 3 exponential. This is nothing special or unique to me. That's the fast MACD from, if you go to the MACD website and you look at some of their white papers, they settled on 6, 19, and 3. My big claim to fame is that calculating it on VWAP instead of calculating it on close gives you a lot more confidence in the indicator. And so I see what you see, Junie. I see on June 27th, we got a end of day signal. And then on June 28th, we got a follow through day. And then I see that it has been faltering. That, those follow through days don't always lead to immediate gains. But when you get this little bit of pullback like we're getting, that tells me that you can still buy this at a discount. And I love having St. Joe in my portfolio because then every month, almost like clockwork, you can sell premium against it. And then every 3 months, you get this added bonus, this frosting on the cake of having a dividend sent your way. So I have no bad feelings about adding St. Joe to your portfolio. And I would, whether you buy it outright. Let's see if they have some substitute call options that you could use. Let me pull this up. I would go out in time. And so you can see here, they only go out as far as December 2024. So maybe we go with either the 35 or the $40 strike price call. And then they are trading at the more specific, like 50 to 60. There's even a 55, but I'm not sure I would sell premium at the 55 mark. So I'd probably go 55, 60. It's going to be not the biggest money maker for you, but at the same time, this one is just so reliable that it will churn out a nice income for you, way higher than you would make by putting your money into a mutual fund or something like that.
All right, Joe, thank you for that, Junie. That's one that we continue to bring up over the past 140 episodes. I know we've discussed it a handful of times. All right, well, the markets are all in the positive. The S&P is really rocketed rolling, followed by the NASDAQ. So heading into our holiday weekend, right? It's kind of already the holiday weekend and with a little bit of trading today, right? Any final words? Anything we should be keeping an eye on? What should we expect next week? Anything unique?
I would not be surprised when investors come back next week. I think a lot of investors took the whole week off, right? Just like they do around the winter holidays. And so we've been looking at record low volumes since Monday, Tuesday, half of Wednesday, and today. I would not be surprised if we come back Monday and there's a recalibration. We see some selling. I would just keep your eyes in this second half. There's just some unusual stuff happening. Like we said, there's only 3 stocks that have been buoying the S&P 500. Take a second over the weekend and really take a look at that XPX-EW, equal weighting index, and compare that to the SPX, and realize that if you don't have a background in selling premium with options, you need to get it, because most of the stocks out there, especially the stocks that are backing companies that have been around for a while, that are solid plays, they're going to be sideways channeling in the medium to long term. And selling premium is a great way to be making money. So you really want to have that under your belt.
That's right. And in addition to that, if you've enjoyed the broadcast, if you're not already following us, subscribe to the YouTube channel, hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. If you have any questions specific to some of these strategies, some of the names that we've covered, feel free to throw us a DM, send us or leave a comment in the message. Head on over to tradingtrainer.com. and hit the contact button there if you need some additional support. If you need or you want access to those indicators, the links to that are in the chat as well. Head on over to the site, sign up, grab those, add it to your charts so you can kind of follow along with what AJ and the team are doing. Otherwise, enjoy the weekend with the family. Enjoy the shortened. Is today shortened day? Are we going to be ending here soon, or is it? It's
no,
it's full day.
Full day, but that doesn't mean investors are engaged. But yes, it's a full day.
Yeah. All right. Well, with that, we'll catch everybody next week. We appreciate you guys tuning in. AJ, appreciate you showing up after your festive day yesterday. We'll catch everyone tuning in next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you